Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, we shall discuss what is direction in Forex synthetic market. You see, why you lose more money when you trade is because the price go in opposite direction, or the price go in opposite direction to hit your stop loss and then go in your profit, your take profit direction. Okay, so you see that direction is something that needed to be treated the most, since it actually is one of the determinants of loss or profit. So I will continue, but before I continue, if you haven't subscribed to WinFS Trading YouTube channel, do your best to subscribe and turn on the bell notifications so that you get notified each time I upload a new content. And do your best to like and share to your network so that YouTube pushes to a high level of audience. So I continue with the discussion. Direction is very mysterious in trading, as it is highly changing variable. Okay, direction is sense of where market is currently breaking level in lowest possible time frame, but the higher the time frame, the better it becomes to give profit. So at different time frames we have different directions. Okay, so you don't trade all direction, you only trade the major directions, which is in alignment with the main trend direction. In alignment, should be in alignment with the main trend direction. The changes in direction is what makes traders lose money. Trading in measure or impulse direction gives you great statistical edge. Market comes with paths. Market comes with paths. Okay. Market comes with paths of different lengths and directions, subject to the left-right law of market flow, which I'm going to explain when I get to the chart. Okay, market normally flow from left to right, it can't flow backwards, and so as it is flowing from left to right, it actually creates lengths of different direction. It creates paths of different lengths and directions. It can create a length of 20 pips in one direction, a length of 40 pips in another direction, a length of 1 pips in one direction, a length of 100 pips in another direction. So how do you know the right direction to follow? There are two major directions in the market: either you buy, called buy direction, or up direction, or you sell, which is down direction. Okay, mostly optic pulse in the H1 and above tends to be probabilistically reversible everywhere. You know, this, it shouldn't be just H1, just put M1. Okay, from M1 and above. Okay, it's actually trying to tell you that the market doesn't move in one direction, it reverses. The direction keep reversing. Paths against main trend are more reversible. They're actually called retracement. Paths against main trend are more reversible, as market must maintain flow in the measured direction of the market over the long term, that is in the direction of the main trend. M5 moving average can be used to study directions reversals. We mostly talk about the reversals here, because had it been direction is just one-sided, I should be talking more of continuity. But market reverses a lot at different time frames, and this is what creates confusion in traders' mind. We can trade at reversible levels with reduced risk. Why? because at those reversible level like resistance and support, demand and supply, most time market price have to break them first and create fake breakout before continuing to change direction. And so most of these things, liquidity sweep and smart money, stop loss hunt, can make you even miss big opportunities or lose your money before the opportunity comes again back to you. Okay, so I'm gonna trade this in this video. We can trade at reversible levels with reduced risk on normal risk when the market have changed character. Like we can trade at reversible levels with reduced risk, okay, and then with normal risk when the market have changed character and break structures at certain time frames. Okay, so there are two types of entering the market in this subject. When you are entering the market at a very strong resistance support to demand or supply, you have to reduce risk. Most time the market have to go against you again, hit your stop losses. Now as a West trader, if you reduce your risk and the market hit your stop loss, what you do is you wait for another change of trend and then you re-enter that market with maybe this time around with normal risk. But if peradventure you enter the market and it goes your way, you enter the market at reversible level and it goes your way, then you can actually enter more positions when the market retraces, because you are now assured of where the market is heading to. Okay, so apart from entering markets near reversible levels, you can enter a market that is already flowing, like it's already heading to a direction. It have already gone maybe 20%, 30%, 40% of the full length. So you can continue that market at good prices after retracement. That is the best market to trade. That's the best market because you will not be fought with all these stop loss hunts, fake breakout. You will not be fought with it, but your entry matters a lot. If you enter wrongly, most time retracement can go deep and still take you out. Join our VIP today to avoid all the stresses of trying to get consistent profitable signals. Join our VIP. We have categories of VIP, up to 4 categories. Join the one that you pretty much like, and your life will change. The thing is, when you actually subscribe to our Telegram channel, you got to come to DM for these signals so that you'll be added to those channels and groups. Trading in the measured direction is the only way to succeed faster in trading, because it is hard for measured direction to fully reverse. They reverse sometimes, but it's hard for them to fully reverse. They reverse 20 to 30% of time, but the trend continues. Okay, the trend continues. Swing point cycle completion matters here. I'm going to treat this topic in a more formal way on the MT5, because it is one of the let me call it psychological stuff that brokers use to actually keep you losing for several years. Yes, it's possible you can lose all your money, or every time you trade you end like you lose all your money throughout your trading life. It's possible because of this swing point cycle completion matters. Okay, because of this swing point completion, I'm gonna talk about it shortly when I go to the MT5. Okay, listen, I'll be working on some lower time frame and higher time frame. Let's start with H4. So in the H4, what is currently happening is that market break this level, give us a retest and start pushing up, which is the basic law of breakout and retest. And so right now, this level is a very strong key level. So when price reach there, it reverses by the law of reversibility. It reverses because this area is highly probabilistic to reverse, so it have high probability to do what? Reverse. Okay, so it's reverse here because it have the probability to reverse. You see, before it reverse, it break it a little bit and start coming down. Okay, this does not mean that this market have changed direction. No, it just is seeking another key level to continue going up. So in the 1 hour time frame, this is the nearest key level because it is actually coming to the nearest, basically the nearest with great power. Okay, yes, the nearest with great power, meaning that the nearest where the market experience high momentum with gaps. You see it break and keep pushing from here, meaning that this is where there is high volume. The volume increase here, there is sudden rise in volume here. There is sudden rise in volume simply, and the market gain demand and increase. So price is coming to tap here. It's gonna take time. One thing is gonna take time. Some people will wait, and they will buy somewhere here. They will buy here. What are you buying? You buy here, right? But see the price here. You can even buy here. Before you know it, it will be here. This is the final bus stop. Probabilistically, nothing is sure, but with a high-level mathematical and statistical idea and probabilistic idea, is going to the buy will continue at this point. Okay, so remember we are talking about direction. So right now the market is breaking levels. Okay, in what? Downward direction, and then we will say that the direction is downward. Okay, but me as a trader, I'm not going to trade downward direction. Why? Because the strongest dominant in this market, the major dominant in this market are buyers, because in the higher time frame the market is making a serious uptrend move. Okay, and you see, based on what we are saying, directions are reversible everywhere. Like they keep reversing, but the main thing is, if you want to trade, just follow the main direction. There are two directions, up or down, just follow the main one. Okay, so why I say that this market will just come down to continue buying is because of the fact that we had experience in this game, and that's why you need to enroll for our courses for you to make it here. So just how do you expect this market to sell? Because some people will like to sell here based on Fibonacci effect. When you are selling here, the market can just start buying and go up to the previous high, simply because it have retested certain Fibonacci level. Okay, so Fibonacci effect is actually affecting all traders, and most time where you expect market to retrace to, it will not be able to reach there. This market is currently below that 8.2% Fibonacci level. It can start buying from there, but the patient dog eats the fattest bone, meaning that we don't care about whether we miss the signal or not, but we care about if the market can go to where we want it to go before we make decision. If the market, we met our conditions before we start planning our trade, before we start planning the entry. You see, that's the main thing. So you can leave this chart and go for other stuff and come back tomorrow. It's still there, it's still retracing. Some retracement can take up to more than 2 days, more than a day, more than several hours. So why are you in haste? Just like this one, this is the deadline, this is the critical point, this is the final, and it buys. Okay, don't expect that in this season the market is buy like this, and you see that it wasted time during the retracement, showing that it's a distraction. Every retracement should be a distraction, and the way it started buying, it didn't spend much time and it buy. You can see it takes fewer candles to reach a maximum high. It even break the previous high with certain level margin. I see. So I can't sell this despite how interesting it looks. That if I say it's gonna come here, no, I can't even take any sell trade here. Once I've taken my profit when I bought here, I'll wait for this market to come here, I'll buy. So the direction is the major direction, which is buy, while the selling are the minor direction or distraction. We don't need it. But market keep changing direction, keep reversing and all of that. So we talk about the turning point cycle completion. So I want to bring that issue here. You see, turning point cycle completion is very critical. You see, market reached this high and top, right? In other words, it tested a fib level somewhere here and go up. So the fib level is where market reaches and reverse, right? So it tested it and go up. So what do you expect? Two things must happen. Either it break this high or it come back to this fib level. So it came back. So we now say this is a low, this is a higher low, and this is a higher high. So if a low creates a high and a high creates another low, but these lows are equal. So it creates equal low, meaning that the market is ranging. So this low creates a high but is a lower high and then a top. So the study of highs and low and the orientation is what we call the market is turning point cycle completion. So when this market drop here, don't expect it. Two things must happen anyway. It either go up a little bit and come back, or it break this level. So the level has been broken now. Okay, the level has been broken. If a level is broken, price must go and retest it. Most time you can't predict certain things in market, but there are ones you can predict. You can predict events that happen in the main direction, but retracement event is not predictable. Like to predict when retracement will start and end is not all that easy. That's why you need to join our VIP. We have high level psychological and high level mathematical method of doing all this. And you see, market have to come and retest here and continue coming down, or it can come and retest here and continue going up. There is no certainty of what happens during retracement. Retracement is where traders lose more money, because you are entering the trade in the middle of the retracement, or when the retracement has not ended, you keep losing money because that retracement is going on. Okay, so I will not encourage trader to trade retracement unless you will reduce your risk and you can be able to enter at early part of that retracement. Then you will reduce your risk, because retracement must surely happen. The retracement have to flow from one turning point to another turning point. It's flowing from this high and it's coming to create another higher low somewhere here. Okay, so your ability to predict them early and enter early and reduce risk, you are trading against the trend, so you have to reduce risk. They can reverse the market at certain Fibonacci levels, and you lose more money. So thank you. Keep coming to WinFS Trading, where the truth is revealed. Make sure you stop losing. Do the necessary thing. Join our VIP. Enroll for our courses. Be among the big boss. Start making money. Buy your first car. Build your house. Make more money, man. Make more money. Thank you. I'm bye for now.